the word is buy. We're not buying. If anything, they're vendor financing. So they're loaning us money to buy their stuff, even though we can't pay back any of the money we've already borrowed to buy the stuff that we bought, yet they keep loaning us more. So the sooner they stop throwing good money after bad, the better. Because again, the factories that the Chinese have aren't going to go away. The labor, the skilled workforce, all of the supply chains, all the stuff that has been built up, all that real investment will remain in China if they stop shipping stuff to us. So doesn't that stuff have value? I mean, and look, if they don't sell to us, they can sell to somebody else. It's not like Americans are unique in that we want things. The rest of the world wants stuff, so in theory, they can sell to the next highest bidder that Americans were able to outbid. But I think more likely, more of their production will be consumed domestically, and so they won't export it. And you have to remember a key economic point. Export is not an ends in and of itself. Exporting is a means to an ends. Why do countries export? To gain from comparative advantage. If you produce something very efficiently, you want to produce more than you need so that you can export it, and then you can use your earnings to import something else that maybe you aren't as efficient in producing, and as a result, you end up with more goods to consume because of exports. But if you're simply exporting for the sake of exporting, then you're wasting your resources. It doesn't make any sense, and that's what the Chinese are doing, because all they're getting in exchange for their products is our paper. And the only reason the paper doesn't crash is because they keep buying it, and they keep loaning it back to us. So no, I mean, China does not need us at all. We need them. And that's what people just don't seem to get, right? Because it's not like we can produce the stuff that the Chinese are producing. Because if we could, we would be doing it right now. We can't.
Yeah,
now,
that is so true.
Could we eventually do it? Yes, but it's going to take years, if not decades, of investment. And in order to do that, we have to reduce our consumption, because you can't spend and invest the same money. So it's one or the other. You either consume it or you save it and invest it. And so we haven't had to save and invest because the Chinese have been doing it for us. But now we don't have, anything to show for it. So if we want to rebuild what we lost, because at one time, all the stuff that is in your studio, all that consumer electronics, if you were able to have, do this in the 1940s, 1950s, everything would have been made here. We made all that stuff ourselves, and we exported it. Right? But we don't do that anymore because we've relied on the rest of the world to do it for us, and we've used the dollar's reserve status to get away with it. But if we have to go back to a independent, self-sufficient industrial economy again, and we have to start producing stuff, that's going to take a long time. And during the interim, there's going to be a huge recession because the phony economy has to collapse. Now, the good thing is, there have been a lot of improvements since the 1940s, in technology that would make a return to industrialization easier, more efficient. I mean, even what's happening now with artificial intelligence, I mean, that has the potential to help make America more productive. Of course, the same is true for the rest of the world, but it's not going to happen overnight. And it's going to require, in order for this to happen, a big reduction in government, because government is going to have to cut spending dramatically in order to relieve the domestic economy of the burden of paying for all that government, because we can't pay for all that government and then reindustrialize our economy at the same time. Right. So we have to lighten the burden on the private sector because it has a Herculean task in front of it, and it's going to be impossible if it's also burdened by high taxes and high regulation. I mean, that is something that would not have a big cost to the government, but would have a huge benefit to the country, which would be repealing a lot of rules and regulation that unnecessarily inhibit our productivity. And in fact, those rules and regulations are part of the reason that we outsourced everything to China in the first place.
Yeah. I think one of the other things, Peter, that's amazing, I mean, being back here in the United States, just one last point, Alex, before we go to this one, is quite interesting, is just when you look at workers. I mean, we simply can't hire workers to work in a restaurant. I mean, so I mean, it's amazing because we sometimes get comments like, we don't need, Apple doesn't need China. Just bring back the Apple factories. We can manufacture our iPhone, here in the United States. I'm like, no, you know what? We definitely can. I mean, we certainly have the technology and the process to do that. Your iPhone's going to cost you $5,000 to $6,000. I mean, so as long as you're willing to, to pay 5 times more for your iPhone, let's pony up, let's go for it. But the problem is
nobody will.
No,
in fact, one of the reasons people were able to buy the iPhones at all, even to pay $1,000 for an iPhone or $1,200, was because of the cheap financing. Yeah. Right, that the cell phone companies were fronting the money. But why were they doing that? Because money was so cheap, they were able to do it. But as interest rates rise, all these cell phone carriers can't afford to offer this kind of financing. And so that means that people that have iPhone 14s, they're not going to be lining up for iPhone 15 because they're not going to be able to get those sweetheart financing terms. Right. So people are going to stick with their phones a lot longer. And of course, why not? I mean, there's nothing wrong. I mean, even if you're still using the iPhone 11 or whatever, 10, they still work good.
Yeah.
It's not like, you need to get the newest. But when the cell phone companies were just giving them to you for nothing, well, just just take it, no interest, and we'll spread the payments out when they can't do that anymore. So yeah, these companies are in a lot of trouble. And if they had a manufacturer here, they'd be in even worse trouble. And of course, if the iPhone was manufactured here and it went up in price by 3 or 4-fold, then people wouldn't even buy iPhones. They would just buy, the phones from a different manufacturer that wasn't manufacturing in the United States, because the product would be far more competitive.
They'd probably go to Xiaomi, one of the leading Chinese ones.
Samsung would just, would love it to see the Apple try to produce everything here.
Yeah, absolutely. We have had a lot of questions about Chinese banks. What is the status of Chinese banks and this? Alex, go to the next slide and you go ahead and open up this question.
Well, first of all, on the cockroaches, sure. I mean, especially when they're all eating the same food. I was saying the same thing in 2007 when the subprime problems arose, and the Fed and everybody else was saying, well, it's contained to subprime, right? It somehow is unique to these subprime markets. And my point was, no, it's not unique to subprime. Subprime is the weakest link in the chain. I mean, that was the craziest part of the mortgage market. And so it makes sense that it would buckle first. But I said, this is just the tip of an iceberg. That there are problems throughout the entire mortgage market, not just in the most extreme example. And now the same thing is happening again when you have the failure of Silicon Valley Bank, and they're like, oh, well, this is just a unique situation to Silicon Valley Bank. It's because, it has so many tech customers or crypto, and, it had such a high percentage of the deposits were uninsured.